Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 27th, 2025, and we're diving into Champion Homes' fourth quarter and full-year fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Champion Homes, a leader in factory-built housing, has just released their latest earnings report, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. Champion Homes reported net sales of $593.9 million for the fourth quarter, a 10.7% increase year over year. John, what are the key drivers behind this growth?
The growth in net sales is primarily driven by a 5.1% increase in U.S. homes sold, reaching 5,941 units. Additionally, the average selling price per U.S. home increased by 5.0% to $94,300, which contributed to the revenue boost. The company's focus on expanding its retail capabilities and product mix has clearly paid off.
And what about profitability?
Champion Homes saw a significant improvement in profitability, with net income increasing by $33.6 million to $36.3 million. The gross profit margin expanded by 740 basis points to 25.7%, largely due to the absence of last year's product liability costs. However, the adjusted EPS of 65 cents fell short of the forecasted 75 cents, which might concern some investors.
Operational efficiencies and future outlook. Despite the revenue growth, adjusted EBITDA for the quarter decreased slightly by 1.1% to $52.6 million. What factors contributed to this decline, John?
The decline in adjusted EBITDA is primarily due to increased selling, general, and administrative expenses, which rose to $110.3 million. This increase is attributed to higher variable compensation from increased sales volumes and investments in new products, marketing, and technology. These are strategic investments aimed at supporting future growth.
Champion Homes also reported a healthy cash position and continued its share repurchase program. How does this impact their financial strategy moving forward?
With $610.3 million in cash and cash equivalents, Champion Homes is in a strong financial position. The $20 million share repurchase in Q4 reflects their confidence in the company's future prospects. Additionally, the board has authorized a $100 million share repurchase program, which should provide further support to the stock price.
Strategic initiatives and market position. Champion Homes has been active in strategic initiatives, including the acquisition of Homes. How does this align with their overall strategy?
The acquisition of Homes is a strategic move to expand their retail capabilities and enhance their market presence. This aligns with their focus on investing in new products and services to support channel partners. CEO Tim Larson emphasized their commitment to managing market volatility through strategic investments, which is a positive sign for stakeholders.
What did the CEO have to say about the company's future outlook?
Tim Larson expressed confidence in their strategy, highlighting the company's focus on customer satisfaction and execution across all channels. He mentioned that despite market uncertainties, Champion Homes is well positioned to continue its growth trajectory.
Key takeaways. As we wrap up, let's summarize Champion Homes' performance and investment prospects. John, what are the key takeaways from this earnings report?
Champion Homes delivered strong financial results for fiscal 2025, with net sales reaching $2.5 billion, a 22.7% increase year over year. Net income also saw a significant rise to $198.4 million. The adjusted EPS for the full year was $3.52. With a refreshed $100 million share repurchase authorization, the company is well positioned for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Champion Homes' performance in the comments below. Until next time.